Real estate in the country is no longer only navigating choppy waters. It's now battling a tide reversal. Buyer sentiment has turned negative, costs are rising, industry is cash-strapped and unsold stock is piling up. Isn't that what you're reading every day? Well, they also say there's a downturn. The question we have at the top of our mind today, how do you beat this downturn if there is one? And more importantly, how do you make the most of this downturn and come out at the top as a smart and savvy investor? In fact, smart and savvy investors do wait for these moments when there is a lot of panic, and that time perhaps has now arrived. With me on the panel today, Nishant Singhal, promoter and director, Strategy Investor Clinic; Pankaj Bajaj, MD, Eldeco Infrastructure and Properties Limited; Karthik Verma, co-founder, PropTiger.com; Sameer D'Souza, founder and CEO of Prop Equity. From Mumbai, Shobhit Agarwal, Managing Director, Capital Markets, Jones Lang LaSalle; and Vikas Chimakurti, Director, Kotak Realty Fund. Gentlemen, thank you very much. I know that the panel is waiting to probably burst this media hype that there is a downturn. But let me tell you why I believe, and many of us journalists believe, that there is a downturn. The biggest reasons for the slowdown in sales is not a shortage of buyers, but unaffordability. 5 reasons why buyers have stopped buying is what we are discussing today. Unaffordability of apartment units today in the 2 most populated cities, NCR and Mumbai. Even cities like Bengaluru and Pune have now seen prices rise by 15% plus per annum in the livable micro markets. Second reason, that capital values are so high that rental yields are beginning to look a little silly in most markets. Renting a flat, if you open an Excel sheet, seems to be a way better financial option for a lot of working people today. Even for investors, the game has turned. If they do get possession of a swanky new flat, if they can't rent it out, the maintenance cost plus property tax is hefty. Add to that the rising interest rates on the home loan cost of financing. Home loan rates are now perched at above 10.5% plus. Economic and resultant job uncertainty is of course another big factor for buyers to postpone their decision. Make no mistake, the environment is tough and people are worried about their jobs, and income from businesses are also down. Elections, let's face it and let's not discount it. That's the big event why buyers have disappeared or at least are waiting on the sidelines. This is the time money is needed for funding elections. Money which had been stacked into real estate now gets withdrawn. So 5-6 reasons why buyers are probably nervous. 5 signs of distress, and I know the panel here and in Mumbai is waiting to crack open each of these 5 signs of distress. We'd like them to do that because you need to see the reality. Fall in new launch capital values. Now this is something I'm wondering if anyone will deny here. Key NCR markets have started witnessing slump in the new launch capital values. Figures report a 5% decrease in the new launch prices in the NCR's biggest market, Gurgaon, and I think 5% is benign. It's much more in Gurgaon. A 27% fall in Navi Mumbai when compared to new launch prices last year. This is Prop Equity data. Record fall in absorption. The Western Realty market, which includes Mumbai, Navi Mumbai, Thane and Pune, have together posted a 27% fall in the demand during January and August 2013 when compared to the same period last year. Inventory overhang at record high in major cities. Data compiled by Prop Equity shows an unhealthy spike in inventory overhang, a figure which indicates the health and potential of the market. This shows unhealthy build-up across all major cities with a staggering number of 98% in West India's key markets, followed by 34% increase in northern markets and 33% rise in major markets of South India. Mumbai, of course, has been worst hit, recording a 42 months of unsold inventory level. Now, one more point, resale prices are lower than developer prices in markets across India. The resale prices have fallen by 15 to 20% below developer prices in investor-driven markets and distressed sales. Dwarka Expressway in Gurgaon, deals in resale markets are trading at 30 to 40% discount of the current developer prices. There are schemes and discounts on offer across the country to bring in the buyers. India's biggest real estate developers, including DLF, Hiranandani, Rustomjee, Indiabulls, Unitech, are now offering subvention schemes in new projects. Buyers only have to pay 20 to 30% upfront and rest on completion. This is a clear testimony of the tough times that Indian real estate is facing. And we're going to stop there because we're talking about residential markets, but commercial property, if you look at that, is in extremely choppy waters. And if you look at the slump in commercial data compiled by CBRE and Cushman and Wakefield, they show that office space absorption in top 8 cities has declined by approximately 26% in 2013 over 2012. I'm left breathless, and I'm sure the panel here is just waiting to pounce at me. So let me start with you, Nishant, because this is an interesting topic which you prompted us to bring to this discussion table. How do you beat this downturn? So first, let's come to the big question. How real is the downturn?
So, Manisha, I agree with the fact the resale prices are down, unsold inventory is piling up, etc., etc. But
so at least the figures that we've read out, they seem to be correct.
Yeah, but these are the figures at the top line level. I think we need to go deep into it. So, what I want to highlight is that real estate is another asset class like equities. Sensex was at 8,000, went up to 22, came back to 8, and it's now again at 21. At all levels, there were value picks. You cannot say that at 21,000 there are no value picks. And you could have said the same thing that 8,000 there were value picks. So all I'm trying to say is that smart investors need to identify these value picks. So I want to highlight 3 themes where customers can focus. Number one.
We'll come to that later.
Okay.
We'll come to that later. If you give that, then we have to close the discussion, Nishant.
So identify value picks.
You're saying that so there is still value in the market.
Yes.
It's not that every market is overinflated and every market is bleeding. Is that what I'm hearing?
Exactly. So
okay.
let's look at the point of unsold inventory. Okay. We say, okay, unsold inventory is of 10 quarters, 12 quarters, 18 quarters. But look, within real estate, there are different asset classes. Let's look at plots. Let's look at villas. There is no unsold inventory of plots and villas available. Even on Noida. No, there is not. There is none. So there is enough appreciation in these asset classes within the real estate asset class. So while there is unsold inventory pile up in the run-of-the-mill apartments of 2 BHK, 3 BHK, 4 BHK, but within real estate there are asset classes where one can look at where there is no unsold inventory overhang.
Okay, so villas and plots. Karthik, come in here. So, I'm going to get you to support or debate Nishant's point. Number one, downturn for real or not?
Well, I think Nishant is right to observe that there is a downturn, but it's not across all different types of classes of real estate and types of real estate. I think the issue is more around, investor appetite. To Nishant's point, real estate investment is just one asset class among a choice of n number of asset classes that the Indian investor has. And those asset classes range from gold to stuff in the stock market to a fixed deposit and so on. At this point in time, a lot of these investors are fairly stretched as far as their own liquidity is concerned for a variety of reasons, that some of which you mentioned related to economic sentiment and macroeconomics and so on. So, investor appetite in an environment when the news flow is so bad and there are a whole bunch of uncertainties on the horizon, and there are prophets of doom like Manisha who are, exaggerating to some extent some of these issues out there. Definitely investor appetite has been a little bit constrained. Then it's just a question of how much liquidity somebody has to be able to plonk down a plot, to buy a plot in a place like Gurgaon or Noida, which happens to be fairly expensive relative to other parts of the country. We're not seeing that much of liquidity among investors to be able to put a lot of money down right now. To some extent, there's a bit of a wait and watch approach right now. There's a lot of political uncertainty as well, and within different states that we operate in, presumably where Nishant operates as well. I'm assuming a lot of investors are behaving in a similar manner to what our experience with them is. We'll just wait and watch, wait for a little bit more certainty before we put down, orders of magnitude of close to 1 crore or plus into buying a particular asset. And for the time being, you're getting paid to wait to some extent in terms of your purchasing power. If you're a senior citizen and can avail of higher FD rates and so on, you're probably just about maintaining your purchasing power of your capital. So there's probably enough alternatives right now.
What you're saying is happening. Investor appetite is going down, but perhaps not such a big downturn. Okay, I'm going to look at these interesting figures. You talk about downturn and you say, hey, the industry is cash trapped. Well, all of that might be happening, but it's really not a blanket statement for the industry. If you look at the total PE investments, January to September 2013, PE investments have been a little over 11,000 crore rupees in real estate. And if you look at 2012, the PE investments were 7,650 57. So PE investors have actually got a little bit more excited about real estate as of now. Vikas, come in here and tell me what's going on. I mean, we talk about a downturn. You're obviously saying a lot more value. Is it that the developers have become a lot more cautious and a lot more realistic about what the valuations of their projects are?
No, I think, Manisha, what you need to look at is the PE investments which have happened in 2012 and the first half of 2013 is the asset classes in which the capital has gone. In first half of 2013, significant amount of transactions happened in the commercial asset class. So you had large chunky transactions happening where some of the international funds have gone ahead and acquired large commercial income yielding properties. So that's the reason why you would see the amount to be higher in first half of 2013 compared to 2012. But fundamentally speaking, most of us are of the view what you are saying. There is clearly a downturn, and whether you are catching a falling knife now or the knife has to fall a little bit more before one starts deploying capital is a debatable point, but it's clearly downturn and one has to be cautious enough before one starts deploying capital. So once you knock off the commercial investments which have happened, then you will actually see the amount of capital which has gone into residential is actually not much. And the key point to note is that most of these private equity investments which have happened in this calendar year of 2013 are more of refinancing kind of transactions. There's not much capital which has gone in for growth capital. You're not funding the acquisitions of developers for further land or further FSI as the case may be. It is more for refinancing some existing debt which is there, which a private equity fund comes and takes out the existing debt which is there.
Vikas, you've actually clarified a lot of things here. Shobit, would you agree that, after hearing Vikas, I pretty much feel that there is no denying or being in a denial that there is no downturn here in India's residential real estate market?
So factually, sales have slowed down on residential. There is no doubt in those statements. But what we are also seeing in terms of private equity investments is that there's a mismatch at the moment on the cash flows on project specific levels, and therefore whilst from a retail investor it is more difficult for him to take those calls, from an educated investor or institutional investors, I think it's a great opportunity for them to come and support some of these projects that are ongoing, sales are established, so underwriting is easy, and therefore you're seeing a little bit of a comeback of private equity on the residential space per se. So clearly there is support, there is money, but sales are slow, and it's going to be like this for a bit. And this is not to say for all the several reasons that you gave. I'd like to add, this is probably the first time that the market has turned in the favor of the buyer. He has a choice. There are enough projects that are going on in all major cities. He takes time to decide. Obviously the economy isn't helping in terms of movement, and he knows that the price is not running. So he takes his little time to decide whether he wants to buy now or buy later. 3 months indecision doesn't make any difference to the home buyer today, which was not the case in 2005, 6, 7, where prices were moving up dramatically. So if you didn't decide today and you went back to the developer 3 months later, he would probably ask you for 10% more. So clearly the markets are changing, they're becoming more buyers favoring, and hence you're finding this dichotomy. So yeah, I think this is going to stay for some time.
So finally the buyers get to call a little bit of shots in this country, which they haven't been able to. Pankaj, isn't that true? I mean, Shobit has just said it all, and one of the points I mentioned as 5 reasons for why buyers are staying away is very clearly, the top one was that in many livable micro markets, property prices have run up so fast, they've left the buyer breathless, and it's become unaffordable with the high cost of financing.
There is no denying that. And one of the reasons is that people cannot afford these prices. So many of the markets that you referred to anecdotally, Dwarka Expressway, I know it's a great market, but some of the projects have been launched at such a high price, and they were all subscribed as well. And now because those investors are not finding an exit, so you find that there is a big gap between
So you agree that developers did go irrational in terms of
not
pricing?
the developer, it's the market. The developers cannot sell anything if there is no buyer for it.
Really, Sameer? This is true, or was there just this entire craze? You know what I find surprising about India and the world over, right? You say, don't go and buy when the market is running away. Don't make a beeline, but that's not the way buyers behave. Everybody is run away from the market right now, but they were all queuing up, and it was drawing room conversation to discuss how much the property they bought 3 months ago had appreciated.
I can't entirely blame the Indian investor class. You know, the going has been so good in the Indian real estate for the past 15 years, and especially so in the NCR region, where
We've not had a cyclical downturn at all.
There has been a downturn and prices have come down
very quickly.
Prices have turned around very quickly. You've had a 20% compounded annualized growth for the last 25 years. You look at the other asset classes, you know, you don't even know whether you're recovering your capital. Literally, that's the situation that we've reached with respect to many asset
10
classes.
years gold has outperformed every other asset class.
How many people used to invest in gold?
That's true.
Right? We
But
were all
everybody was
looking at
investing in real
equities,
estate.
but real estate and equities really let everybody down. So I think that's been primarily the reason. Yes, everybody in the panel says prices have gone up so high, and that's primarily the reason why now sales have slowed down, and I completely agree with them. Also, I think there has been unprecedented increase in new launches and deliveries that are scheduled to happen over the next 3 to 4 years, and that is because the real estate markets were doing so well. There was so many more new developers emerging. All cities were coming out with new master plans where new licensed land was coming about. There was unlimited supply of land. Look at, for example, Noida. What Noida has delivered in the last 3 years, or launched in the last 3 years, it hasn't delivered yet, Noida hasn't launched in the last 30 years. Look at Gurgaon. In the last 30 years, what has not happened has happened in the last 3 years. So there is a huge amount of supply that's come out. Prices have really, I think, made investors very happy. Developers have had a field day. So I think it's been a win-win for everybody, and I think this is the best thing that could happen to the Indian real estate market.
Sanity returning to the market.
Sanity is returning. I think this is where opportunities will get created again. Some people who've got caught on the wrong side will suffer a bit, or if they decide to hold on for a 5 to 10 year period, they will also still get out without a loss, really, because really, speaking with respect to real estate, when infrastructure comes in an area, if you look at Dwarka Expressway, anybody who's even bought at 11,000, if he holds on for another 7-8 years, infrastructure will come about, livability will come about, it will be right next to Delhi. Eventually you'll see prices at 15,000 over there
eventually,
also.
but you know, that's not what the Indian investor is used to. If with a large chunk of his household savings going into real estate and him jostling for space, looking at the fact that this is not a country with surplus land, and therefore probably real estate has a very, very strong bottom. Are those the myths which are now getting broken? Are they crumbling? I mean, are we catching a falling knife if we buy right now? These are some of the questions which still have to be answered by the panel here. Is India's real estate market headed for a big downturn? Is it a short-term one? And whatever happens, how do you emerge as a winner in it all? You're watching the Realty Debate. We'll be back in just a moment. It's quite a herd mentality in real estate, isn't it? Buyers flock to purchase property in droves when real estate prices are rising, or even when they are at their peak. And the same buyers just run scarce when prices start moderating, as it's happening down and when the chips are down. How do you really muster courage to purchase property in uncertain times like today? And if you've been an early investor and you've got stuck with 3 or 4 investments, not knowing how to finance them, how do you get out of that jam? So we'll get the panelists to answer some of those questions as well. So let's come to that early investor, you know, who's ended up probably creating that big party in some of the markets. Nishant, what would you say to, Sameer ended up by saying, have the patience. An early investor who's got into 3-4 properties, has got used to the early rotation game, doesn't even have the financing potential today. How does he get out of that logjam?
So, so when we sell properties, okay, we sell around 1,500 properties every month. Okay,
And you're saying and claiming that that figure hasn't come down.
No, it was 1,800 at a point, came down to 1,200, now it's back to 1,500.
Okay.
So markets are
We'll
improving.
come back to the reason
Yeah.
on why it's gone back to 1,500.
90% of these properties today are bank financed. Okay?
Okay.
And you know how difficult it is to get a home loan in India. You cannot get more than one home loan. Okay? So most of these guys are stable buyers. Okay, I agree there are 10 to 15% people who buy properties only to flip.
Is that what your statistics would say,
Yes.
Nishant, that in your entire pie of 100 out of, let's say 1,500 transactions, there are only 15% investors,
who are
raw
dependent on their
investors?
self-funding. Otherwise,
Okay.
85% investors are dependent on bank funding. And you can see figures given by HDFC, ICICI, the largest home loan providers in India, that the home loan market is still very robust. Okay. And if I cannot get more than one home loan, then I cannot say that I am over leveraging. I might be over leveraging on my personal loan side, etc., etc., but that's not, again, you can't get more, a lot of personal loans in India like US, Europe, Canada, Dubai, etc. So here, buying is stable. Only there are 10-15% guys who don't want to pay more than 30% and want to get out. And it's currently a scenario which is a bit of a problem for those guys. But developers generally, and these guys are large investors. They have direct relationships with developers, they do large deals, etc., etc. So they do separate kind of arrangement with these developers where they get more time to pay. Because again, developers are dependent on these guys for future launches. So they are
The
comfortable.
channel partners, as you say.
Yeah,
more
through
or
channel
less.
partners, through us, or directly as well. So these guys are able to navigate through these difficult times.
Okay.
Balance 85%.
And why are there so many distress deals going on? I'm getting a mail almost one a day on a distress deal.
No, distress deal can come. I might need money for anything, right? Maybe somebody
How
in
come
my
they
family.
weren't coming 6 months ago?
No, they were. Resale market has been very active in Gurgaon. If people were able to flip at 30% by paying 30%, you can't say resale market was not
Sameer, is
vibrant.
that true? Is that true?
I have
That
to
the
tell you
market
the
wasn't,
facts.
You see
I mean,
Noida, for
has
example?
it not
No,
become
I
more
have to tell you the
distressed today?
facts, and I think everybody should know, first of all, especially in the north, we are sitting in huge investor-driven markets. I'll give you a small example, and a real one, that too. DLF just completed 3 projects, Magnolias, Bel Air and Park Place. If they were end users, those projects should have been full up after completion. Those people have got projects after 5 years, 3 years delays. 50% of those projects are lying empty after 6 months of completion. Why is that so?
Absolutely. Okay, so
You know,
hold on.
first of all, why is that so? There is nobody willing to even rent those apartments. Rentals have crashed by more than 50%. So there is a huge investor community out there which is far higher than 15 to 20%. I would peg it at 50% in the north. Maybe
I agree,
in the
they are
south
not end
side,
users, but
maybe in
they
the
are not
south side.
investors also.
So the question really is, what are they then? Are they not end users? They're not investors? What
They
are
are not end
No, no.
users.
What you're trying to-
Investor is a guy.
They're
who
not
cannot-
over-leveraged investors.
Who
You're not
cannot
over-leveraged
pay more than
investors.
30% and has to flip or will do a distress sale. That's an investor. If somebody has bought and has not moved in, you cannot say that that guy is an investor.
Okay, let me bring in Karthik here. Karthik, tell me, what is the percentage of those leveraged investors who would probably feel the pinch of this downturn the most? I mean, we've established undoubtedly they exist the maximum in North India. It's not just NCR, it's also Jaipur, it's also Lucknow.
Look, greed is a kind of behavior that's displayed everywhere in India. It's not just a characteristic of people living, above the Vindhyas in North India, so on. So there are pockets of greed that affect investors all across the country. You named Jaipur as one city. I'm sure the same is the case in Mumbai, Bangalore and so on. Many of these investors were continuing to work on the myth that property prices in India don't go down. You've just had Sameer in the first segment talk about how for about close to 20 years property prices were compounding at 20% per annum. If you're used to that and you believe in that as the gospel truth and believe that property prices will never decline, of course you'll lever up through whichever way possible. You'll put a whole bunch of assets on the line to be able to invest in property because property will give you a better, higher return according to your understanding of how business cycles and real estate cycles work. Well, last year or so, we've had a reality check. It's been the perfect storm of bad macroeconomics, a tough funding environment, low liquidity, and a horrible political economy as well that has affected a whole bunch of different things to happen in the market. As a result, investors who previously could flip, as Nishant used that word, their property within just a few months and make a 20% return on that, just holding it for 3 months and so on, aren't able to do that because the marginal buyer has gone away from the market. So a few things need to happen. I think people need to ratchet down, at least these investors need to ratchet down their expectations of, the market only goes up, doesn't go sideways or down. Well, we've had some evidence of that over the last 12 months or so. Secondly, people should also recognize that, things take a lot longer in India when that perfect storm arrives. Cleaning up does take a long time. Yes, there is some kind of a backlash, or not backlash, but just some kind of a snap effect that we experienced in 2008, 2009. There was a slowdown. By the time late 2009 happened, a lot of this investor appetite returned, which is probably why you're seeing some of the troubles on their personal portfolios right now. But people need to recognize that, these kind of business cycles and economic cycles will affect real estate in India going forward. Things won't be the same the way they were over the last 15 years or so. I think we saw a step change at that point in time. My understanding of markets is that's probably not going to recur, or won't recur to the same kind of magnitude that we've seen so far. Now, to answer that question, you just asked about what's the percentage of people who are really leveraged up and so on. There is nobody who tracks this. Most of this data is just anecdotal, but all across India, whether it's in Mumbai, in Bangalore, in Chennai, in Calcutta, there are a lot of speculators in real estate, just as there are in, the stock market and currency markets as well.
Okay.
Are they burning right now? Some of them might be, but then they shouldn't have been investing in a lot of these things if they didn't have a sufficient margin of safety to begin with. For me, the bigger issue around affordability, and Nishant shared some of these details as well, is if 85% of the buyers for people like Investors Clinic and for us as Prop Tiger are end users, how badly is their affordability being affected? Because the investors might choose to invest in this asset class because it's cheap or it's something they need to have an allocation to, but the sustenance of this market is going to come from end users. And right now, I think the end users are suffering because they're worried about their job prospects. They aren't seeing the same kind of salary appreciation today of the type they saw 5 years ago. And they're somewhat worried about the overall political economy, macroeconomic situation. So all this is affecting their sentiment and their affordability a lot more. And for the health of the market, I think that needs to recover a lot quicker than, what any one of us has any handle on or any optimism on right now.
Absolutely. I think you've really positioned that answer extremely well, and that prompts me to ask Vikas this big question because, there is this, whenever I speak to developers in Mumbai or I speak to developers in Bengaluru, they turn around and say, hey, ours is not really an investor-driven market. There aren't any speculators. They're all end users who are going to live in the homes. Is that really correct? Because we are now, everybody's accepted there is a downturn, prices could go either ways, we may not be at the lowest point yet, but if you were to just give us a pan-India feel, because you keep looking at projects and developers and markets, where are the pain points the most?
I think the question is you need to look at the data points. We were actually doing an analysis from 2009 onwards till Q1 of 2013, how many units got sold in Bangalore, NCR and Bombay market. What is interesting is that the number of units which were above 3 BHK which got sold in the NCR region was somewhere around 2 lakh units. When you look at the census data in which we got from third-party sources, the number of households which are earning more than 2 lakhs in the NCR region, 2 lakhs per month in the NCR region, were close to around 2 lakhs. So what you're talking about is that people who can afford more than 3 BHK, which is approximately 2 lakhs households, they have actually bought number of units which are actually equal to around the number of households which are there. Forget about the housing stock which is already there, assuming, so basically it means that people would be having some houses earlier and they have bought more houses. Yeah. So all the eligible households, assuming that everybody bought one, have actually a house. But if you move the data to Bombay, the number of households above having 2 lakhs is somewhere around 3.5 lakhs. The number of units of 3 BHK and above which have got sold in Bombay is around 1 lakh. People could then, if you look at from the penetration standpoint of view, the number of households who have been able to buy in Bombay is significantly lower than that of NCR. If you look at Bangalore data approximately the number of households which have got more than 2 lakhs per month as salary income is approximately 0.9 lakhs. And the number of 3 BHKs and above which have got sold is approximately 0.9. So if you look at actually from the amount of sales which have happened from 2009 to 2013, except Bombay, both the cities have equal to or more than the number of households which are eligible to buy 3 BHK and more. So the question is that how many people can buy 2, 3 more houses? So are we talking about a market which is going to grow very, very slowly in terms of absorption, or is the price going to crash or is going to fall to a certain extent where some of the households who have a higher income category can potentially come and buy, right? So I to a great extent agree with what Samir is saying in terms of the investor class which is there in Delhi is far more than what is there in let's say in Bombay. It could be also because the Bombay houses are so expensive that very few people can afford to buy 2 or 3 units. So that could be one of the reasons. So,
But Shobhit, this...
so in terms of...
Okay, because the data here is absolutely eye-opening for us. But go ahead, you were making a point. I'd like you to complete that before I go to Shobhit.
So everybody is right now in a flux situation. So we actually need to see what is going to happen over the next 6 to 9 months and how much of the demand is actually going to come back in. So our house view is that potentially if there is a decent amount of correction in Bombay, the first city which is going to see demand coming back, we believe is going to be Bombay because of under penetration of purchases by the existing households.
Wow.
Then could be other cities.
Okay, you know, this is the first time, I must say, Vikas, that I'm looking at this data, and it's so interesting. I mean, NCR seems to be saturated. Bengaluru, surprisingly, is saturated. The number of households earning above 2 lakhs is 0.90, and of course that's 90,000, and the absorption has also been 90,000. Shobhit, your comments on this. I mean, interesting that Bengaluru, which we continue to believe is a great end user market, probably people don't buy more than 1 house to live in, everybody wants only a house to live in, isn't that way at all. So you tell us your view of the market. I mean, this Chennai OMR, which has slowed down so much, is unbelievable as well.
Absolutely, very interesting data points both by Samir and by Vikas. But really, if you look at the buyer behavior, I still believe that there is a lot of maturity that's coming in. There are different categories of product. We've been talking about 3 BHK and luxury. I think clearly in that segment there is a slowdown, but equally people have started to build. Developers are putting in new supply in 2 bedrooms, 1.5 bedrooms, studio apartments, and the demand there is picking up. So clearly there is maturity, and people have started servicing the demand at the bottom level, which was being ignored. So really, if you look at developers who are catering to high-end or mid to high luxury apartment are feeling the heat. But equally there is demand. If we go to Kalyan, you see huge amount of uptake. You go to Sona Road, the new Sona Road or the extended Sona Road, I think there is demand. You go to Noida, it's an interesting market where there's been sort of overbuilding, but yet I still think that if you do a launch at the right price, you will find a demand and you will find buyers coming in. And because investors are slowing down,
exactly what he's been wanting to say. All this while he was discussing how their Sona Road project, they're not even giving any flats to Investor Clinic at Prop Tiger to sell because his sales team cannot manage the sales calls, right? Or the demands.
Yes, that's true. I'm sure you're not going to charge me for this. But the point is that if you, even today, if you come up with a price point and a location which attracts the end user, and by end user I mean somebody who's actually going to live, and I don't mean a long-term investor who's patient capital, I mean somebody who's actually going to live in house.
There is a lot of patient capital.
Yeah.
Because no one wants to invest in stock market, so all the patient capital goes in real estate.
No, I'm not peddling houses as an investment product here. I'm trying to sell houses as a genuine need, as a person would buy a car. A person doesn't buy a car for an investment. So housing as a product to be consumed, I think there's a lot of demand at the right place at the right price, and I can give you enough number of projects which are doing well.
Do you agree that all developers have woken up to this fact that prices had gone up too much.
Listen, don't
and they
keep blaming
need to do
the
this.
developers here. I need to come to the defense of my fraternity here. Listen, if people turn up to their, if a developer thinks that the price is 6,000 rupees a square foot, and the people like my friend here or the end users, or there's an irrational community, they come up with, they want to lap it up at 9,000. Who's the developer to say no?
Really, is that how it happens?
No, no. So who's the developer
so
to say no? So it's not the developer's fault. It's the market which sometimes does become
Okay,
irrational.
Let's blame the market that
Yeah.
it became
And-
irrational.
and-
But I mean, answer this very basic question. Would developers had turned sane in terms of pricing if the buyer demand hadn't started disappearing? I don't think they would have woken up. There was no wake-up call. Except now, when developers are realizing there's no way they can sell at those high
I'll be
prices.
honest with you. Developers have woken up when they found that yes, they've done a huge amount of bookings, but now the installments are not coming in because they sold too pricey, and the people, the flippers who had only 30% capital and they can't flip anymore. There's a big divorce between the primary market and the secondary market.
That bleeds.
Yeah.
How do you face it with your investors, Dishant? Where, forget the investor, we're talking about patient capital end user who has bought it at 6,000, 7,000, 8,000 and is now seeing resale prices come down by 30% and 40%. Do you get those questions? I'm sure you get them.
So Manisha, 6,000, 7,000, for example, Dwarka Expressway, what we're talking about, or New Gurgaon, or say new launches in
They
Noida.
come down across the country.
Yeah,
Let's not
yeah,
keep going
yeah.
back to
So-
Dwarka
so,
Expressway.
no, no.
I'm just taking an example.
So these products got launched some 9 to 12 months back. And most of these products were pre-launch products where the clients have not paid more than 10%, in some cases 15 or maximum 25%.
No, but you're
Okay?
saying 85% of your buyers are end
Yeah, yeah.
users. Whoever's bought a year ago, believe me, whether it's Pratik Biltech or it's Mahagun, any project in Noida,
Yeah.
the resale prices, every Amrapali project, structure up there, developer price is 5,500, I can get a resale at 4,500 to 4,200. That's a reality.
So there are two different types of customers. Okay, there are customers who are ready to pay 80% of the consideration at 4,200, and there are customers who are ready to pay only 20-25% at 5,500. We need to understand the cash flows of customers also. In this market, you would have both type of buyers. People who have ready cash available, maybe they have sold their house or whatever, they can take whatever 100% home loan, want a ready house, they want to pay entire consideration and let them buy at 4,200 or 4,500, which is like 20% discount to the current market prices. Okay, and there are clients who don't have that 80% to pay. They have 20% self funding, so they are happy to buy at new prices. So for example, if you see like deferred payment plans, it's a 30/70 plan, which is a very famous plan these days. You didn't see these plans in 2008 or 2010.
Oh, no.
You,
Now everybody,
so
big
now,
developer has
if
it.
you are selling at 7,000 and you pay only 30%, you give only 2,100 rupees per square feet. Versus if you buy at 5,000, you
Okay.
have to pay that 80%, 4,000, which is
All
double
right,
the
so
investment.
different kind
Yeah.
of buyer. But I'm going to take a break because we've fairly exceeded time. I think I'm going to come back with just one big question to the panelists. How do you identify that right price? I mean, clearly there are deals to be had out there. It's a time to really snoop out those best deals because there are plenty going around. There are freebies. It's a good time to buy. How do you get to assessing this is the right market, this is the right house, this is the right developer, and this is the right price? You're watching the Realty Debate on how to make the most of the real estate downturn. Well, you may deny it, you may accept it, but I think fairly what the panel has established, there is a price correction in India's real estate. What you need to do now is make the most of it. Probably it was an insane market, it definitely needed some sanity, it's returning. Now the big question is, how do you make the most of this sanity? Do you wait a little bit more? Because what would you say? You said that at the beginning, you don't know whether you're catching a falling knife, but what would your numbers and what would your gut instinct tell you to do right now? If it was a retail investor wanting to buy.
So if I'm looking as a retail investor or retail buyer, if I actually need to buy a house for myself, then surely this is the time to be in the market. And over next shortlist basically the projects which you want to look at and wait for next 3 to 6 months and then take a decision. But today, would I go and buy until there's a huge distress which is available? I don't see myself looking at buying some property right now. It depends. It's not a general answer. You need to look at micro market and the city. But yes, at this point of time, one should be in the market looking at.
You're saying don't be in a hurry to buy right now. There's going to be plenty of time to get a good deal. Sameer, that's what you've been saying.
Yes, but I also think this is the right time to be in the market. Definitely. This
Step out,
from
be
now
smart.
onwards to the next 6 to 9 months, you will get enough and more good deals in the market, especially in the resale,
How do
under
you
construction.
identify what's a good deal
Very
and at the right
easy.
market
It's
price?
very easy. Watch our show, get to know the weighted average price of the market, get projects under construction, 1.5 years to completion, and you know the launch price at which these projects were launched at, you know what discount you're getting, because there are many investors who bought 2-3 flats and now I've got
So
stuck.
you're saying look at resale market rather than the primary launch market?
Unless a primary launch, a new launch is coming at realistic price points, which is soon going to start happening in
It's
certain micro markets, and certain micro markets may still not happen because cost of acquisition of land may be still very high, right? So really speaking, there are enough and more opportunities today where people are stuck, and for a retail investor or a retail end user, there is no better time than now to cherry pick and buy the right properties.
Okay, cherry pick, that's the theme which is emerging. Don't be in a hurry, cherry pick, look for resale prices or at least pre-launch prices or launch prices, but very, very realistic ones. Shobit, what do you have to add in terms of how do you make the best pick? Because you also said it's a great time to go ahead and look at property.
Yeah, my advice to home buyers is that stay focused. There are lots of deals all around, but and it can actually just confuse you a lot. And my advice is to stay focused and negotiate hard and get your deal in the projects that you want to.
What is the
Make
sweet
sure that they are
spot?
under
Shobit, what's the
execution.
sweet spot? What is recession proof right now? Where do you see the base not slipping too much?
Different markets have different price bands. For example, in Bombay, if you're buying at the 10,000 rupee levels, in the suburbs, I think it's a great time to pick them up if you're getting deals there. Luxury, of course, is difficult, but difficult to pinpoint. But yes, there are options available. For Gurgaon, I would still think that it's a sub 10,000 rupee price, anywhere between 7 and 9,000. If you're getting a price, if you're getting a product, you should look at it closely. And well, you want to cherry pick, but don't get defocused because there are lots of projects. So I guess you need to get your.
So you have to make a very informed choice. I think that's the message which is coming across. Karthik, what's your view? I mean, how do you get to those best deals and know that at least your downside is protected? I think the worry there is at least the downside is protected.
Well, the reality is you'll never know whether your downside is protected or not until, of course, you have the benefit of hindsight. So you've got to lay out a bunch of different scenarios for yourself as you look out into the future, 1 or 2 years out, or whatever your holding period might be for an investor, or if you're an end user, whatever the date of possession might be. What I would suggest is, if you're an end user, then cherry pick, as one of the other guests said just a moment ago. Don't be in a rush. Understand what your affordability is, just given job security prospects and so on, and understand whether whatever EMI payments that you're signing up for would be within your means or not. If you're an investor, I think I can't stress enough on the point of just review your own behavior over the last 1 or so years and understand, what is it that you've learnt about the market. I think one of the things we mentioned earlier in the show is, this myth about property prices only go up seems to be busted. Something else that investors would do good to learn about is how important liquidity is and their ability, or what's been their inability to flip, in the last 12 months or so. So depending upon whether you're an end user or a retail investor, I think those are the two things that I would talk about respectively. But you're never going to know if you've hit rock bottom or not until you have the benefit of hindsight. So good luck. I hope we've hit rock bottom, because I also would like to see the market go forward. But
okay,
who knows?
Pankaj, have you hit rock bottom?
There might be much worse in store for us.
Absolutely.
We can only hope for the best.
Okay, on that note, I'm going to take it from Karthik.
No, you can never judge it to a nicety. You can't time the market.
I think there's scope to actually bring down prices more. You're a developer. talk from that front. I mean, you've launched some projects which you claim are very, very reasonably priced. Would you be able to, if
I had this interesting discussion with a very large fund today, and as you probably know, we have a sizable presence in tier 3 markets, and he predicted a huge upturn in prices, and his theory was, look at the replacement cost of the product that you're selling. The land prices have not gone down and they're not likely to go down. The construction cost is only going up. Whatever you're selling today is probably going to cost you 30% more to replace it. So if you look at it that way, it makes something's got to give. Either land prices have to come down, and by that I mean raw land prices, and I don't see that happening really for a number of reasons, and not just real estate.
What's the sweet spot? I mean, let's not look at price-wise, but let's
So
look at
frankly,
what
I'm
kind of
not-
housing is the sweet spot. Where do you think there is safety?
I'm
Looking at the economic uncertainty, election in the offing, and probably a hung parliament as well.
See, Manisha, I'm not great at advising investors, and I can't stress enough that
No,
investors...
even a buyer,
for a
Pankaj,
buyer,
no
yeah.
one likes to see their asset prices going down. Home is their biggest asset. No one wants to buy at 5,000 and then see the prices going down.
Don't worry about the next 6 months. That's what my advice is going to be. Take your checkbook out, go out this Sunday, look at the choose a location which suits you, which is close to your place of work. Find out the developer
so
with
be
good track
patient
record and negotiate a
shop.
great deal.
Do a lot of window shopping before you
Yeah,
choose.
and negotiate
Nishant,
a great deal.
Any one little thing, I know I have to wrap up in 30 seconds.
Look for 3 themes. Okay, buy on deferred payment plans where you pay 30% now, 70% after, say, possession, because you can
Don't commit big chunks.
big chunks. Okay, you can see the construction, progress of construction, you can see the sample flat, choose depending on your requirement, manage your cash flows. Secondly, look for themes where you have subvention till possession, because you only pay 20% and the balance risk is with the developer. Third, look for asset classes which in the wake of new real estate regulation bill or land acquisition bill, those assets will be significantly costlier in 5 years, 8 years from now, like plots and villas. It will become a dream to own a land. Okay, because it will become almost impossible to acquire large townships.
Okay, we'll discuss all of that later. There are concerns with subvention scheme. Sameer has them, but then you see Sameer every day. We will bring you those concerns, and I'm going to thank the panel here. We've really had a very interesting discussion, and I must thank Vikas Shobit for being extremely upfront. Vikas, it was a pleasure to have you on the show and give us those eye-opener figures. Shobit, great perspective on what the buyer should be doing right now. And Karthik, with the NDTV Red on in the background, I think you were more passionate than ever before. Nishant, Pankaj and Sameer, pleasure gentlemen. And as we conclude, there will never be a time when you will be sure that prices have bottomed out. That's what the panel is saying. No one has that crystal ball, but if you've paid close attention to the panelists and their thumb rules and some strategies specified, you should be able to beat the downturn in real estate, even come out profitable from it with a horizon, let's say, of at least 5 years plus. Hope you found this debate useful. Do write in to let us know your thoughts, and goodbye from me, and thanks very much for watching.